The stock of the day today. Perhaps I'm a day behind, but we have had a lot of brokers coming out and weighing in on Macquarie. Shares of the group touched a record peak after it said that first half profit may not fall as much as some players in the market had feared. So the group said the performance of the first half was slightly down over the same time last year, again pointing to COVID, but it still sees stronger than anticipated numbers across its commodities and global markets divisions and raft of price target revisions to the upside today. So the question being, gentlemen, would you be buying Macquarie Group? Carl, I'll start with you. When you know it's hit record highs, but you know the story that's still potentially yet to come.
Yeah, look, I love to buy stocks at record highs. It's my favourite time to buy them. Bottom left, top right is generally my motto as a trend follower, and that's just a style issue. So my belief is that there's a reason why a stock is bottom left, top right. It's not about what's happened, it's about what's about to happen. So markets make their bets, either become part of demand or supply based upon their expectations. So expectations for Macquarie Bank are very high. Hence, the share price is also up there. I tell you what, though, I mean, the chart was as pretty a picture as you could get before yesterday's run up. Today's move on a fundamental basis takes some of the gloss out of it. We've got a fair value target, just checking my notes here, at 188.63, which still allows for about 5% upside. So there's a little bit in there. Prior to today, brokers' mean average target was 178.51. So I'd like to think we had it right. The brokers are only just catching up. Overall, the news was a little bit mixed. I mean, they said the short term might be a little bit softer, but the medium term outlook is still very, very strong, and the markets have keyed off that second part of it. The question is whether I would buy it now. And look, again, it's you've got to find the right stock for the right person. So I think, if you're a longer-term self-managed super fund player who wants sort of a more of a core holding, not going to lose too much sleep, and have at least a market return, then I think it's fine to continue to buy here. Otherwise, as I said, if you're looking for alpha, you're probably not going to find it now that there's a slimmer margin to our fair value target, at least, than yesterday.
Got it. Now, Claude, Macquarie is really positioning itself to be able to put it bluntly, make money from the global decarbonization push that is ongoing. So does that make Macquarie a financial institution that is more interesting to you?
Not really, although they probably will make money, and that's been their strategy for a few years. But I think that they're fairly good at just figuring out where the money flows are going to be and trying to position themselves there. And that's what they're doing with this sort of slightly greenwashy vibe that they're putting out at the moment. It's also just a business decision. There's going to be government, there's going to be investment, there has to be. So that's smart. They'll probably continue to do well. From a valuation framework, I guess Macquarie Group doesn't look too crazy on about 22 times profit, with that profit being flat, as long as you sort of take the view over the long term that this kind of financial class will continue to take more of the value that society creates over time, which has been the trend throughout my lifetime, certainly. So, yeah, I think it's sort of reasonable. You could ride the ups and downs. Having said that, if you look at the very long-term chart, it's very clear from Macquarie Group that it's sort of leveraged to the overall business cycle and the business sentiment. So big drawdowns in, the tech crash. You had big drawdowns in 2009, and then you can see the most recent big drawdown then was when the pandemic hit. So, generally speaking, I'd say that given it's a quality operation, this is one that you could sort of, wince and buy the dip in times of fear and panic. I'm not so sure that it'll be a great win now. Depends when the next sort of cyclical turn is. You can see in 2007, you can't see on that chart, but 2007, it took until 2015 to reach its highs that it had in 2007. So if you buy it at the wrong time, you could definitely have some pretty flat results for a decade. So personally, it's not the time for me, but also I'm not massively into massive companies like this anyway.
No, but that is not a buy, so it is not going into the ausbiz portfolio.